Hello, everyone, and thank you for tuning in to the update with Oakwood Financial Group. I'm Joshua Dobi. Really appreciate your willingness to engage in this medium again. I hope that now that the holiday season and New Year's kinds of things are behind us, that you're enjoying the winter aspect as we make our way through now January into February. For those of us north of the Mason-Dixon line, a little bit cold, a little bit blustery, a couple of snowstorms already, and south of the Mason-Dixon line, well, you don't have to worry about that quite so much. But again, thanks for your time, and to be respectful of it, I'm going to go ahead and dive right in with our update. Several remarkable things that we've seen here. Certainly the effects of COVID-19 continue to be with us, and we're going to talk a little bit about that here in a few moments. But just in terms of market resiliency here over the last couple of months, we anticipated that there could have been a significant amount of negative market turbulence following the election season there in early November. We haven't seen that to this point. And as a matter of fact, the markets have even pushed up a little bit in certain areas since then. So that's been good to see in terms of market strength. Gives further credence to the idea that underlying these restrictions that have been imposed because of COVID-19, that we really do continue to have a very solid footing as far as our economic standing is concerned. That's very encouraging to see, because as we then see restrictions lifted, what we hope will be later on this year, we're hoping that we begin to see some pop up in terms of economic return to, quote, normal a little bit. So some very encouraging things as far as that's concerned. Like I said, in pockets of the market, still encouraging to see some of those returns. Now, I've talked about this on other occasions, and I'm going to say it again here because it's happening again here in 2021, where some of the returns that we're seeing, especially as noted by the most popular stock indexes, are really masking other parts of the market which aren't doing as well. If you've been watching the stock market, you've seen things like tech and biotech and maybe even GameStop. I'll talk about that a little bit later too. It's really been a pretty amazing market here so far in 2021. However, there still are significant portions of the market which continue to be decimated. Certainly those things which have to do with travel, transportation, airlines especially, hospitality, hotel groups, sports and entertainment, restaurant groups are still suffering significantly, to the extent that just before the end of last year, we had a second round of COVID-19 related financial relief legislation that passed through Congress and included some refunding for payroll protection loans and also some opportunities for disaster relief loans for if you qualified for those kinds of things. So still very much in the throes of the effects, again, of the mandated government shutdowns and restrictions on business, which are continuing to have negative effects on the economy. We're also seeing that in terms of the unemployment figures. We're trending better, and in unemployment terms, you're trending better when your unemployment figures are getting lower. We're still seeing a good trend line there. Unemployment figures continue to get smaller, but we're still about 3 times above the normal average or pre-COVID kinds of numbers. Our most recent unemployment statistics included a mark of 6.4% unemployment rate here in the U.S., which frankly, from an historical perspective, isn't all that bad. However, pre-COVID, we were right around 3.5. Which was frankly some of the best unemployment some of the best unemployment figures that we had seen in a generation. So we're still not back to where we were pre-COVID, but we're in a little bit better space than we were than when we started, and we're hoping that that trend line continues here as we continue to make our way through 2021. So all right, so we got some encouraging trend lines on the macro figures, encouraging performance insofar as the stock market averages are concerned, but masking up what still is a lot of economic destruction in terms of different sectors that are still suffering due to the effects of COVID-19. So what does that mean in terms of what yet lies ahead of us? Well, among the factors that's definitely in that mix is discussion on Capitol Hill about yet another round of COVID-19 related relief legislation. Now, you've heard me in several previous updates before this last round went through, talking about how it was coming. I think I was about 4 months worth of updates with you, where I kept saying, it's coming, and it was a long time coming. So we may still have quite a runway ahead of us before this next round is passed. The reason why I'm mentioning it, though, primarily is because of the size of it. Coming out of the Oval Office with this new administration, they are recommending to Congress, can't do it by fiat, but they are recommending to Congress something along the lines of just under $2 trillion. Now, there are a lot of things stuffed into the president's proposal as far as the kinds of things that would be funded, far larger than what we have seen previously, and touching different areas. Staying away from the political aspect and commentary on that, it's just true. There's more in it than what we've had in previous rounds of COVID-19 relief legislation come through Congress. Now, this is the process of making the sausage, if you will. And so there's a lot of proverbial horse trading going on between the houses of Congress and among Congress members in terms of what will eventually be in the bill that may pass. So I don't want to even speculate on what it may be at this point. Just stay tuned. Want to make sure that you're aware of it, that it's out there, that it's making its way through the system, and want to make sure that, again, you're aware that that may be something that's coming down the line. And certainly, if any parts of that apply to you, we want to make sure that you're aware of those, and we'll bring them to you as that becomes law. So that's definitely in there in terms of how 2021 will look. We still have a long way to go for recovery. And I talked about the unemployment aspect of things, but that extends into other areas as well. You take something like the airline industry, or you take something like the sports and entertainment industry. Yes, there probably is a lot of pent-up demand in terms of folks who, as those restrictions are lifted, are going to engage in those activities. But how much of it is going to be inelastic? One of the things that we're watching very closely is the commercial real estate market. With all of this push towards work from home, as we had significant amounts of contraction and even elimination of going to the office in many instances for many large businesses, how many of those large businesses are going to be looking at the current state and saying something along the lines of, well, we wouldn't have chosen to come at it this way, but what if we would eliminate a significant part of our footprint? Probably not all of it, but a significant part of our office space footprint in terms of how we conduct operations in an ongoing fashion. That obviously is going to have a big effect if a notable number of companies engage in that thought process, and that will have an effect in a negative way on the overall commercial office space market. So we're watching that to see what that means. It's not that binary. There obviously are always other factors involved, but that is something that is pretty significant that is sitting out there. And that continues to be amplified by what, in most instances, especially in our urban areas, to this point, has been a pretty hot market when it comes to commercial real estate. How much of that is going to cool off, if any, and how long-lasting will that be? So definitely a factor that we're keeping in mind there. Overall, though, from an economic standpoint, when we're putting all of these factors into the mix, in a very long algorithm that we watch internally here at Oakwood, we see a number of encouraging things, but it's not just going to be pressing a red button and everything's going to be, rainbows and rose petals again. It's going to be a process. It's going to be an extended amount of time. Already we're in a space where the recovery aspect in terms of the public health movements of COVID-19 are far longer than we anticipated a year ago. Definitely didn't think we'd still be addressing this a year from now. So in looking at that kind of thing, and we're thinking about what that means in terms of recovery from an economic standpoint, we know that's also not going to just pivot into a space of prosperity again. So it's going to be a process. We do believe that underlying there are some very positive things economically for us that will continue to improve as the restrictions are lifted and as the public health concerns abate a little bit. And we're able then to see the positive effects of that from an economic standpoint. So we continue to be encouraged. We don't anticipate we're going to have the kinds of returns that we had in 2020 and in 2019 from a market index standpoint. We anticipate that they're going to be more of a reversion to the mean or a more modest in terms of its return, but still encouraging when we're looking at those macroeconomic figures. Well, that's all the update that I have for right now. I want to be a little bit more brief in this one because the last two have been a little bit long-winded. Please always know how thankful we are and pleased we are whenever you reach out to us via email or via text or via phone call. Always good to hear from you and to hear how things are. We're also in the season that we call tax season, so many of you have already reached out for 1099 forms and tax documentation. If you're not receiving things in the mail, which we're hearing from a lot of folks, frankly, the Postal Service has been a headache for us in dozens of different ways over the last year. If you haven't received your tax forms and you're getting ready to move forward to file, or you're wanting to get things over to your CPA or accountant, please let us know. We often can put our hands on them pretty quickly and can get them over to you or to your tax accountant. Always happy to help with that or any of those kinds of things. Well, friends, again, thank you so much for your time. Please always reach out as you have questions or other concerns. And until the next time, I'll look forward to talking with you soon.